So it's a perfect time, students, of financial reporting and analysis we made for this session. We are still under partnership. So remember that under partnership, we talk about conversion of a partnership to a company. So today I would like to do a question of June 2005. This is some times back. But this question, I have done it because it's the same question they lifted and tested in November 2020 question 4 and December 2021 question 2. So it's only that they changed the figures. So the concepts remains to be the same. So what I would like to do is all about we read, we go through the question that is, then we do the presentation of what the examiner was in need of. So this is the relevant question. This is the relevant question. This is the relevant question. So I would like to display that. So this is a relevant question. They are saying that Jembe and Panga were sole traders. Manufacturing farm implements. On the 1st March 2004, they amalgamated and they traded as partners, sharing profit and losses in the ratio of 3:2. So they amalgamated and did what? They amalgamated and traded as partners. They were sole traders. Now they are coming together to operate as partners, sharing profit and losses in the ratio of 3:2. 1 year later, on the 1st March 2005, they converted the partnership into a limited liability company called Shamba Limited. The adjustments have been made to record the amalgamation and conversion by the balance sheet for the sole trader as at 31st March 2004 and the partnership as at 31st March 2005 was follows. So you have the sole traders balance sheet and you have the partnership balance sheet. Additional information. On 1st April 2004, the partners agreed to take up the assets and liabilities of the individual traders at book value, except for freehold property, plant and equipment, and the fixtures and fittings, which were revalued as follows. So they took over. The partners agreed to take over the assets and liabilities of the individual partners at their book value, except freehold property, plant and equipment, and fixtures and fittings, which were revalued, at the following values. So you can see that. Number 2, during the year ended 31st March 2005, Jembe made drawings of shillings 2,390,000, while Panga drew 610,000. Number 3, the partnership was converted into a limited company on the following terms. Number 1, freehold property and accounts receivable were revalued to 6 million and 5.6 respectively. Number 2, Jembe and Panga were to receive 15% unsecured debentures at par, so as to provide each partner with income equivalent to 6% return on capital employed based on the capital balances as at 31st March 2005. That is after accounting for the profit, drawings, and revaluation in note 1 above. Number 3, Shamba Limited authorized share capital was made up of 150,000 ordinary shares of shillings 50 each, out of which 130,000 shares were to be issued to the partners in their profit sharing ratio. Any balances in the partners' capital accounts were to be settled in cash. Required computation showing the value of debentures and ordinary shares to be issued to the partners. Partners' capital accounts. Balance sheet of Jembe Limited as at 31st March 2005. After completing the above transaction. So what if this was the question which was in your exam? Ungepata marks ngapi hapo, Mr. Daniel?
I think Daniel, actually, because I'm just joining, maybe a pattern maybe come for the entries.
Oh, so I'm going to show you how this question was done. This question is a bit different from the others, but the concept remains a bit same. What you need to know is that the concept remains to be the same. So what we need to do is first to analyze the additional information. Then as we analyze the additional information, at the end, you will find that I have answered all the requirements. Because the first thing they want is the computation to show the value of the debentures on ordinary shares to be issued to the partners. So starting from additional information number 1, they are saying that on 1st April 2004, the partners agreed to take over the assets and liabilities of the individual traders at book value, except for the freehold property, plant and equipment, and the fixtures and fittings, which were done what? Revalued. So you compare. So you compare what you have in the balance sheet of the individual traders, then the way they were revalued. So if there's a revaluation gain, the asset account is done what? Debited. Then what are you supposed to do with a revaluation account? You credit if it's a gain. If it's a revaluation loss, the individual asset account is credited. Then you do what to the revaluation? You debit. So since I cannot prepare all the assets accounts, I will just do the revaluations. So I will start with the records in the books of Jembe. Then I head to the records in the books of Panga. So let's start from that point. I think you have the past papers, so you would be giving me the relevant figures. So records in the books of Jembe. So we talk about the revaluation when they did a revaluation. So the revaluation account. So the first asset which was revalued is which one? They talked about freehold property. So if you check in the books of the sole trader, that is Jembe, the freehold property was stated at what value? The freehold property was stated at 1,500. Then once they did a revaluation, they revalued it to 2,000. So we have a revaluation gain of 500. Debit the asset account, but now I'm not preparing the freehold property account. So what I'm supposed to do here is just credit my revaluation account. The revaluation. So credit that increase. So freehold. So it was a freehold property. So the increase is 500. Then what about the other assets? Like now, plant and equipment. From the books of the sole trader in the balance sheet, the plant and equipment was stated at? It was stated at what? 6,800. Do you have the question, guys? Yes, you will understand. Yes. So it was stated at 6,800. 6,800. Then once they did a revaluation, it was revalued downwards. So it's a revaluation loss from 68 to 65. So that is a loss of 300. You credit the asset account, you debit revaluation. You debit your revaluation. So plant and equipment. Plant and equipment. 300. Then what about the third one? Fixtures and fittings. In the balance sheet, it was stated at what? 1,600. Then it was under the additional information number 1, it was revalued to 1,500. So there's a loss of
100.
100. So that is fixture and the fittings. So 100. So this was again a loss. So the balancing figure here it will be a gain because this gain has been reduced by this loss. So 500 minus 400. We have a revaluation gain of 100. So that we have 500 here. We have 500 here. So what are you supposed to do with this 100? Again, the revaluation gain will be transferred to your capital. It will affect your capital account. So how do you get capital, guys? This is FA work, financial accounting work. How do you get capital? Capital is what? The what? Asset minus
liability.
Asset minus liability. And you have that. So if I prepare my capital account here so that I transfer this revaluation gain. So the balance brought down will be for Jembe. Do we have the balance brought down? Do we have the balance brought forward? If you check in your balance sheet, in this balance sheet, see this asset minus liabilities. Assets, the total asset is 3,900. Liabilities, we have 6,800. So capital is 7,100. 7,100. That is 7,100. Then we add this to that capital of Jembe, the revaluation gain, the 100, so that what I will transfer to the partnership, transfer to partnership will be the total 7,200. So there's somewhere we always say that, there's a note I had mentioned somewhere. We always say that in conversion, the firm may decide to transfer the assets at book value, and a company subsequently revalue them. Or alternatively, the firm. So we always say that in conversion, the firm may decide to do what? To transfer the assets at book value. And a company subsequently will do the revaluation of them. Or alternatively, the firm may first revalue the assets. That is what we are doing here. Alternatively, the firm may first revalue the assets, share the gain, and transfer this amount to the company. But now, again, we have not transferred. I will come to that point whereby we do a transfer to the company. I will insist again on that point. For now, we are considering what was revalued from the individual partners under the statement under that individual partners, that is, being sole traders, how they were transferred to the partnership before we transfer that to where? The company. So we have done for the books of, that is just not one I have done, records in the books of Jembe. So the next thing you do now is in the books of Panga. Records in the books of Panga. So we do again the revaluation. Now you understand, I think, what is supposed to be done. Now I can go a bit faster. Revaluation account. So what about freehold property? That was the first one. Was there a gain or a loss? Because I can see there's 1,000, then they were revalued to 1,500. Eh? So freehold property. Freehold property, that is 500. Eh? I can take my time to display what I'm trying to do, because this question was not easier. So 1,000, you can see it under the sole trader balance sheet. Then it was revalued to 1,500. Additional information. So that is, we have a gain. For plant and equipment, it's from 5,600 to 55. That is a loss of 100, or 100 or 50. It's a loss of 50 because it's from those figures 50. It's 5,600 to 55. Eh? So it's 100. Here we have 56. Then here we have 55. Then for the fixtures and fittings is the one which we have 1,550 to 1,500. So that is 50 loss. Eh? So the plant and equipment and fixtures and fittings, there is a revaluation loss. For the freehold property, there is a revaluation gain. For the gain, you credit. For the losses, you debit. So we record them accordingly. So plant and equipment, we have the plant and equipment. So plant and equipment is 100. Then we have for the furniture and fixtures and what? Fittings. Eh? Fixture and fittings. It was 50. So 500 minus 150. So there's a revaluation gain of? There's a revaluation gain of 350. So here we get 500. And here we have 500. Then you know that the capital, we have it, the balance brought down. So this amount of revaluation gain will increase your capital so that we know what is supposed to be transferred from the individual traders after revaluation of this asset. What is supposed to be transferred to the partnership. So the revaluation, the balance brought down here is for Panga. It's the asset minus liability from the balance sheet anyway, the bottom right there. And someone can share that question to the group. There's a student requesting for that. So kindly one student to share that question to the group. So the balance brought down for the capital of Panga, the figure
50.
56. 56. 50. And then we have a revaluation gain. This one, which will increase this balance by 350, so that we know what is supposed to be transferred to partnership after revaluation. Transfer to partnership. So the total here is 6,000. 6,000. Eh? So that is 6,000. $6,000. Then after that, remember that we were dealing with individual partners. Huh? Now, if you go systematically talk about additional information, 2 and 3, you can see again there is valuation which was done under partnership. Other than in the individual traders, there was valuation which was done under the books of under the books of the partnership. So for number 2, it was just drawings. The number 3, the partnership was converted into a limited company. Freehold property and account receivable were revalued. You can see that. 6 million, 5.6. Now I will be considering the last column, the balance sheet of the partnership. So here they are talking about a freehold property and account receivable being revalued to 6 million and 5.6. Were they revalued upwards or downwards? So was there a revaluation gain or a loss? For the freehold property under the balance sheet, it was stated at 4,000. Then it was revalued to 6,000. That is a gain of 2,000. So they did a revaluation before. So then for the accounts receivable, they were stated at 64.20. Then they were revalued to 56.70. So that is a loss. So what am I supposed to do with a gain under the revaluation account? A gain is credited, a loss is debited. A loss is debited. That is why again I would say that. That is why again I would say that I said in conversion, the firm may decide to transfer the assets at book value, and a company subsequently revalue them. Or alternatively, the firm may first revalue the assets. Like now here they are doing revaluation of the freehold property and account receivables. Share the gain. They will share in the profit and loss sharing ratio. That is what I will do. Because under partnership, there is a ratio provided. Under individual partners, there was no ratio provided on how they share. Anyway, in partnership, they were individuals, so there's no way I could have shared. So, but under partnership, you are told how they share. So we will do the revaluation. They share the gain, and then this amount we do what? We transfer to the company. We transfer that to the company. So let's do now the records in the books of the partnership. The records in the books of the partnership. But I don't know what CASNEP thinks when they test some of these questions. So there's a sitting CASNEP can decide to do what? To disappoint students. But once now you are here, we will be able to handle all those questions which seems to be difficult for you, and you will know how you are supposed to deal with them. So we have a revaluation account. So we have said for the first asset, it was freehold property. So it was again from 4,000 to 6,000. So the gain, if I was to prepare the freehold property, I could have debited the freehold property with the 2,000. Then I credit here the 2,000. The 2,000 is just the difference. The difference. 6,000 minus 2,000. Then for the other asset, it was which asset? Accounts receivable. The debtors. The accounts receivables. So from which figure to which figure? It was from which figure to which figure? It was from 64.20 to 56. According to my equation here, 56, 70. Yeah? So the difference?
750.
750. So the gain here is, so 2,000 minus 750. The gain is, so that we share among Jembe and the Panga in the profit and sharing ratio.
1250.
They were sharing profit in the ratio of
1250.
1250. In the ratio of 3:2. 1250. 1250. So share that. Share that one. Three divided by 5 times 1250. What do you have, guys?
750.
750. And the other one is
500.
500.
Yes. 500.
Correct. Let me go to the next additional information. Let me go to the next additional information. So the next additional information they were saying, that is additional information number 3. Jembe and Panga were to receive 15% unsecured debenture. So kindly mute whoever is unmuted. So Jembe and Panga were to receive 15% unsecured debenture at par, so as to provide each partner with income equivalent to a 6% return on capital employed on capital balance as at 31st March 2025. That is after doing what? Accounting for the profits, drawings, and revaluation. See, drawings we know 23, 90, 610. That is not 2. Do we know the profit? Revaluations we know. The revaluations. Do we know the profit? So we need to determine the profit. So the Jembe and Panga were to receive that 15% unsecured debentures. So let's determine the profit. So once I determine the profit, then I will prepare now the capital account for the partnership generally, whereby I will transfer other items and at the same time consider the debentures and shares according to Roman 3 of note 3. So let me determine the profit, then we do other workings. By then you will understand what I'm doing. But I think, again, from the beginning, I am creating sense and you are understanding. So I think I can clear this side. So I would expect that you have these figures because I will use them. These balances. You will be able to tell me these balances because they will be transferred to the capital account. So how would I determine the profit? Determination of profit, because they have said after we have accounted for the profit, revaluation, and what? Drawings. But I don't know the profit. So determination of what? Determination of profit. The determination of profit. So do we have the opening capital? The opening capital? From this capital account I prepared right now, I remember it was 72 for Panga, and for Jembe it was from the capital accounts I prepared, from the records of Panga, the records of Jembe. The opening capital?
350.
The other one was?
350. 350. 6,000.
Right now this one is 6,000. The other one was 72. So the total? 7 plus 6? 13.
13,200.
13,200. So when we have opening capital, see, we always add net profit. You remember that part of equity? This is what we don't have. Then we less what? That part of equity, let's say you were doing a balance sheet, that part of equity. You start with capital, add profit less drawings. You don't remember?
Drawing.
So drawings according to note 2. 2390 plus 610. We have 2390. We have 2390 plus 610. So what do you have there? This is from note 2, eh? The drawings.
3,000.
3,000. You raise that. So that our crossing capital will be. So the closing capital is what you have. You already have that. You already have the capital. The closing capital is this one under the balance sheet. Under the balance sheet of the partnership. So what I've done is that I have taken 71 for Jembe. It's only that this 71 was increased by that revaluation of the individual partners from the asset which were valued. Then 5650 was increased again. You remember that we got 6,000. So the closing capital is the one which is under the partnership, which is 14,350. 14,350. So the 14,350 from the partnership. So we can be able to get this. Because it's 13,200 plus x minus 3,000 is equals to 14,350. What is x? Find the value of x. Your profit will be 14,350 plus 3,000 minus 13,200. So meaning that this one is your profit is 41,50. Yeah? 41,50. Now the next thing I will prepare now generally to consider that is now the capital account for Jembe and for Panga. So balance brought down. You know it's 72 and the 6,000. So revaluation gain. The revaluation gain The revaluation gain
750 and 500.
750, 500. That is why I said you have the relevant figures. So after that, what next can I record under the revaluation gain? The profit which they need to share, because they said after we have accounted for what? That is according to note 3, Roman 2. Jembe and Panga were to receive 15% unsecured debentures at par, so that to provide each partner with income equivalent to 6% on the capital employed, based on capital balances as at 31st March 2005. That is after accounting for profit, drawings, and revaluation. And revaluation in the note above. So we have talked about revaluation. So the profit is the next one. So the profit we have for 150. So share that in the ratio of 3:2. For 150, share in the ratio of 3:2. Share that one in the ratio of 3:2. The profit, we have just determined that.
$24.90.
Sorry?
$24.90. 1660.
1660. So that for the drawings, remember that we always debit. It cannot increase your capital balances, but it reduces the capital balances of the individual partners. So the drawings was 2390 and 610. So that the balance carried down here is remember that they said Jembe and Panga, they will receive 15% unsecured debenture, so as to provide each partner with income equivalent to 6% return on capital employed after we have accounted for this. So we have accounted for that. Then now I will go ahead and check for the return on that capital employed. And at the same time, I will compute Roman 3 of note 3, whereby Shamba Limited authorized share capital was made up of 150,000 ordinary shares of 50 each, out of which 130 were to be issued to the partners in their profit sharing ratio. Any balances in the partnership, any balances in the partners' capital account were to be settled in cash. So give me the balances carried down first.
8050.
8050.
7550.
7550. So I will continue this account so that I account for the debentures, shares, and there's a premium which we realize, so that any balance in the partner's capital account will be settled in cash, meaning that at the end, the balance in this account I'm continuing preparing will be cash. That is according to Roman 4 of note 3. So here, I will continue with this. So balance brought down is 8050. Because they said after we have accounted for this. So that is when I will go ahead to talk about those aspects of unsecured debentures and other items like shares. So 8050, that is my balance brought down, and 7550. So after we have done that, let us now determine the aspect of return on capital employed. After we have accounted for the 3 items, revaluation, profit, and drawings. So return on capital employed. So the return on capital employed. So the return on capital employed, they said, according to this question, it was at what percentage? 6%. Because they said Jembe and Panga were to receive 15% unsecured debenture at par, so as to provide each partner with income equivalent to 6% on return on capital employed, based on capital balances as at 31st March 2005. That is after accounting for the profit, drawings, and revaluation. So for Jembe, so they said 6% on capital employed. So 6% on capital employed, it's 8050. after accounting for the 3, revaluation, profit, and this. So we have the balance of 80-50. And this one is 75. 6% of 75, 50. So what do we have? Give me the answers at least. Compute. 6% of 80-50.
483.
And the other one is
453.
453. Thank you for that. Computation of the value of the debenture. Now we compute computation of the value of the debentures to who? Issued to partners. So let me admit someone here. That is fine. So they said it was based on what? 15%. So Jembe and Panga were to receive 15% unsecured debentures so as to provide the partners with income equivalent to 6% of the capital employed. So 15% of the debenture. Let's say, for example, now here I've not mentioned about what I'm computing is for who. Mute your mic, whoever is unmuted, avoid background noise. So 15% of the debenture will be equivalent of what? Will be equivalent of? Yes.
483.
483. I see you can find X. So 0.15 X is equals to 483. What is X? You divide with 0.15. So X is equals to
3220.
3220. Then for Panga, 15% times X is equals to 453. So 0.15 X is equals to 453. So 0.15
3020.
X is equals to 3020. Have we not answered the part of A, the requirement of A? They were in need of value of debenture and ordinary. So for the debentures, we already know. So the only thing we don't know now is ordinary. For this question already, for A, you have 6 marks. Even the partners account we have prepared partially. So we have answered A and the B partially. Already we have answered A and the B partially. So let me continue. Now we will continue and determine what? We will continue and determine what? Shares, because they were saying about debenture and shares. What did they say about shares? Roman 3 of notes 3. They said the Shamba Limited authorized the share capital was made up of 150,000 ordinary shares of 50 each, out of which 130 shares were to be issued to the partners in the profit sharing ratio. I know some of you want to see this question where I'm reading from. So that is what they said here in this note, in this Roman 3 of number 3. Share Shamba Limited authorized share capital was made up of 150,000 shares, or 50 each, out of which 130 were to be issued to the partners in their profit and sharing ratio. So remember that when the compensation is made, when the company is making compensation to the partners, it can make compensation in different ways. You know that? So you know that compensation can be made in different ways. It can be made in cash, it can be made in shares, it can be made even through the issue of debentures. That is why they are giving you all of this information in this note 3. So the partnership was converted into a limited company on the following terms. So anyway, let's go ahead and compute that relevant shares. But all of these shares, why am I computing this? These are just compensations which were done. So I need to know the purchase. What is the purchase consideration, so that I know out of this purchase consideration, what was settled through shares. For the debentures already we know. So how do you get purchase consideration, guys? Like now for this question, what would I do? From group accounting, we always say purchase consideration is equals to, or we have never mentioned it, goodwill, you know, You know goodwill. So for the purchase consideration,
Net asset.
so it's all about, not even from group accounting. We mentioned about, when I introduced this topic, I remember very well, I mentioned the 3 methods of determining purchase consideration. Which method and which method? When I introduced the topic of, for the guys who have been attending the live class, I mentioned about how to determine purchase consideration. Who can remind us? You have even the notes. We have the Ramsar method. Another one? Ramsar method is when you agree that between the two parties, let me pay this. We just agree. There's another method called?
I think another one is exchange.
We have net asset method and net payment method. So you don't remember the 3 methods. Anyway, here to determine the purchase consideration, I will take, you would have to do a recap on the notes of partnership, the introduction part. There's those 3 methods. So here to determine the purchase consideration, computation of purchase consideration, I will just take the net assets, which is assets minus liabilities, computation of purchase consideration. And there's someone who said that net assets, it's all about assets minus liabilities. So do we have the total value of assets? So you take from the column of the partnership. Then you consider the one which are revalued, you revalue. You use the revalued amount. The revalued assets were 2. Under the additional information, number 3, Roman 1, freehold property and account receivable. The others remains the same from the balance sheet of that partnership. So the balance sheet of the partnership, we have freehold what? Freehold property. So freehold property, was it revalued? Yes, it was the one which was revalued to 6,000. It was revalued to 6,000. Yes or no? Do you see where the 6,000 is coming from?
Yes.
So property. So not property, plant and equipment. Sorry. So plant and equipment, we record which figure? Plant and equipment, I record which figure? From the balance sheet of the partnership. 13. Fixtures and fittings. So the fixtures and fittings is 3,000. Inventory.
3350.
3350.
So what about accounts receivable? Account receivable is
5670.
yes, from additional information. Very good. If you can see that, I can now see that there's someone who is seeing what I'm doing, and I even assume the others who are silent are also following. So what about balance at bank? 125. To get this total, unless there are abilities. We can continue on this side. And if you are unmuted, make sure that your background is friendly. So there's the abilities. So the abilities are what are which items? Payables and bank overdraft. So payable and the bank overdraft. So bank overdraft. So let me write in full. So the payables we have 99.20 and we have 56.25. So what do you have? The total assets?
31.
145. That one 145 minus this
15600.
15,600. So after determining the 15,600, so I need to know the amount settled by shares. Amount settled by shares. So the purchase consideration is 15,600, of which amount settled by debentures. Already we know the debentures is 3220 plus 3020. The total of the two is this plus this
6240.
6240. Deduct that.
$93.60.
93.60. So before I agree on this side, remember that what I will debit here under this capital account is those debentures. The shares I will determine. If due to the issue of shares, there will be share premium, I will record share premium. And any balance will be settled through. Any balance will be settled through. That is according to Roman 4. Any balances in the partner's capital account were to be settled in cash. So before I clear this, so I can say here we have debenture. So I will record the debenture 3220. I don't want to clear. So if I clear, then I go ahead to mention, maybe you will be confused. You will be confused where these figures were coming from. So let's determine shares. After determining shares, maybe if there's a premium, again I will record. If there's any premium, I will record. So let me clear this. So first, I need to get issue price per share. Issue price per share. So remember that the purchase consideration, the balance which is remaining is 93.60. The balance which is remaining is 93.60. That is what we need to know now, which amount was settled through shares out of the 93.60. So they said in Roman 3 of 93, Shamba Limited authorized the share capital was made up of 150,000 ordinary shares or 50 each. So 50 is the par value, face value of the shares, out of which 130 were issued to the partners in the profit and sharing ratio. So out of the 150, 130,000 are the one which were issued to assist in settling the 93.60. So for me to know the issue price per share, I will take the 93.60 divide the 130. So shillings what? Shillings what?
72.
So 72. But remember the par value was?
50.
50. Let me now show you the value. The value of shares to partners. The value of shares to partners. They were sharing in the profit and loss sharing ratio. That is what they said, by the way, in that Roman 3. Out of which 130 were to be issued to the partners in the profit sharing ratio. And we know the profit sharing ratio is 3:2. Is 3:2. So 3:2. 3:2, that is 3 over 5 times the 130 which were issued. What do we have? What do we have? 3 over 5 times the 130 in the profit and loss sharing ratio.
28.
So 28 or 78? 28 or 17?
78.
Alright. So meaning that for me to record their value, the nominal value would be the 78 times the par value of 50. So meaning that out of the par value, there was an excess of the issue price for them was 72 and the par value was 50.
50.
So meaning that there's a difference of 22. This one we call it
Premium.
share premium. So 78 times 22. So what do you have here?
3900.
3900. Then the next one is
1716.
1716. So let's do for the other partner. Hey, you are making a lot of noise. Reduce the noise. Reduce the noise. When you are in class, while watching TV, guys. So 2 over 5 times 130. So the ratio, what do we have?
52.
52. So here we have the nominal value. So you take a 78. So not 78, sorry. Remember 78 was for the other. So 52 times 50. Then we have 52 times the excess. See, we have the share premium of 22. So 22. So what do you have? What do you have?
2600.
1144.
So here we have, so let me make this one to be visible. So 2600 and 11?
44.
44.
1144. 1144. Very good. So record here.
Shares.
Yes, record shares and the premium. So the shares, we have 39 and we have 39 and 26. The share premium 1716 and 1144. So any balance to be made will be
Cash.
any balance will be cash. So it's the same way I could have prepared the bank account, but it's not even important because obviously you can balance that account for bank. Balance anyway that account and give me the bank balances. I don't want to do a lot of workings. Because if I was to do the bank balance brought down it's 125. Then what I will transfer here is what I will transfer to this account. So give me the balances. Give me the balances in this account.
For Panga, 786.
On the debit side or on the other side?
Debit.
Yeah, 786.
Yes.
So that is meaning that for Panga it's 75.50. 75.50. So this is bank. So for the other one, for Jembe, the balance will be on the credit side or debit.
Credit.
So meaning that this total is
8836.
8836. 8836. So the balance here bank is
786.
786. 786. So meaning that if I was to prepare this capital of Panga, I credit here capital 786. Then this one is capital Jembe 786. Obviously the balance at the end will be balance carried down will be obvious 125. Would be 125. Well, this is 1. This is 1 9. So finally, what I will do is now the statement of financial position. Are we together? Are we together? Phone, mute your mic. Mute your mic. As now we do Shamba Limited, the last thing. Shamba Limited. A statement of financial position. As at what? It was as at 31st March. According to my question, it's as at 31st March 2005. So we have shillings. So we start from non-current liability, non-current assets, sorry. Non-current assets. So freehold property, remember it was revalued, Note 3. It was revalued to 6,000. Plant and equipment, You record the way it is in the partnership, 13. That one was not revalued for it to be transferred to the company. So fixtures and fittings. Fixtures and fittings, 3,000. Current assets. For the current assets, inventory. Inventory. Inventories. Guys, what's inventory?
3350.
I think now I have given you enough time. I can be able to clear this one. So after inventory, there was accounts receivable. What about accounts receivable?
5670.
That is 5670. Balance at bank 125.
Yes.
We have total assets, equity and liabilities. So ordinary share capital. So we have ordinary shares which were issued. Ordinary share capital. What am I supposed to add? These two, 39 and 26. And there's a premium. There's a premium of 1716 plus 1144. So what do you have there? The totals?
6500.
Mm-hmm. And
2860.
Non-current liabilities. Remember that other than shares, what do I have to record as non-current liabilities? What am I supposed to record as non-current liabilities?
The 15% debentures.
15% debentures. Figures for the two. So debentures, we determined that it was
2220
and
3020.
3020. So the total
6240.
To 40.
6240.
Yes.
Finally, current liabilities. So current liabilities, accounts payables. Those are direct. 9920. Bank overdraft. Bank overdraft 56 what? 25. So total equity and liabilities. Is our question balancing? What we were
Yes,
pingy pongy
it's balancing.
at what at assets we have?
That 145.
Mm-hmm.
That 145.
That is good.
Yeah.
So meaning that I've answered the 3 questions that I go. This one, I said which one was also tested in the same way?
2020.
Which sitting? November. And I mentioned when I started this session. So you never.
December 2021.
December
Question
2021.
Yes.
Question 2.
Question 2. And this one, November 2020 question.
4.
Let us look at them so that you prove that I'm not just creating stories, but I will not do them. That is your work. So even this one for K and L, you can see it's just the same. Even the additional information, is there anything that have changed? Nothing. Even the percentages down there, they say 15% and 6%. Even the other one, it has decided to open. So even this one, which was denying us access, imefunguka. Ilikuwa question what? Question 4. Even there's no change of percent. So see, we'll do this. So have a nice time, guys. Have a nice time. Have a nice time. You can see Casnem sometimes can play your mind with your minds. They test some past papers from the previous years. Obvious small questions. They rift from those 205, 204 there, 207, 208. Because they know you cannot have access to those past papers. Is there any question, any concern before I end the session? We meet tomorrow. Tomorrow I will be doing. Is someone watching Gikuyu TV? So that's all. Is there any concern?
Mwalimu, I'm trying to see something behind you.
So as we give Maureen time, if there's any concern, you can put her close. Clement, I will share the video, of which I have to take time and edit because you have been making background noise. I have to remove that noise. So I will share the video by tomorrow. So you do the other 2 questions, huh? November 2020 question 4, December 2021 question 2. Thank you for your time and continue with your revision. Tomorrow we do financial analysis, the aspect of common size, statements and ratios. I will do common size, then I will remain with ratios. And once we are done with that, we go to branch accounting. If on noted, I will share. Nice time, guys. Bye.